What is going on, investors? Hopefully you guys are doing well out there. Time to talk about a stock that really almost needs no introduction. Tesla Incorporated, ticker symbol TSLA. The day has come. They have reported their Q4 earnings and their full year earnings, and also started giving us guidance of what we can expect moving into the following year. So Tesla on the call today, or at least on the press release, said that they expect to achieve 50% average annual growth rate in vehicle deliveries over several years. So that's pretty interesting. They also teased that the company expects Tesla semi-truck deliveries to start this year. So most people were expecting that because I think they were supposed to come last year. Like a lot of things, Tesla is delayed oftentimes in their deliveries or their promises, but it hasn't hurt the stock. We see the stock is trading off a little bit. We'll come back to the stock chart, see what this all means. The stock has traded a little bit, but what I'm going to do is jump into the numbers here. So we're going to start here. We're going to take a look at the revenues. I'll walk through the entire thing with you because Tesla is such a critical stock. A lot of you might own these shares, or you potentially want to own these shares. We'll talk about the cash flow. We'll talk about everything going on with Tesla because there's some important things in these documents. So sit back and relax. We'll get going here. So we've got automotive revenues here. What I love about Tesla is we're going to just take a year over year view here. We can break it down through the quarter, but I just kind of want to give you a full year view. We came in at $27 billion, of which we had about $1.6 billion in these regulatory credits. If you aren't not familiar, when Tesla sells vehicles, they do get regulatory credits. They've acquired so many of those regulatory credits that they've started to sell them off to other companies because they've just blown away the competition when it comes to the electric vehicle market. We see year over year, we went from 20.1 billion up to 27. Okay, year over year, 30% growth, 31% growth here on the automotive revenues. Now, from the expense side, we see we grew top line 31%. We grew this expense line by about 12%. So we went from 4.1 up to 4.6. Not that bad, honestly. We see here year over year, we've lost money with Tesla, but they hit a tipping point in 2019 and they've turned the corner this year. We generated $2 billion. That's an operating margin of 6.3%. Okay, this is not Microsoft. This is not Facebook. This is not one of these high margin tech companies, at least maybe potentially not yet, but this is a pretty low margin business. So you've got to have these automotive revenues and the automotive deliveries just continue to accelerate because this margin, this operating margin is relatively low. So moving on, what I wanted to show you on this slide, this is a really interesting slide because we have those regulatory credits with Tesla. One thing that you want to talk about is how much profit do they make on the Tesla cars that they're selling minus the regulatory credits that they get. And so here, deep into the slides here, we're on page 31 here, automotive gross margin excluding these regulatory credits. This is a number I actually pay close attention to because it gives us an idea how much margin Tesla is making on the Model S, the Model X, the Model Y. Is it selling for, a fair profit? So we see here back in Q4, we made 20% margin, slipped to 18% margin earlier this year, back up to 23. Now we're at 20%. So we can see, excluding the regulatory credit, Tesla is in that 20% margin. Now you throw in those regulatory credits and obviously the margin is ticked up a little bit, but those regulatory credits are eventually going to run out. And so that's just why I always look at the business from this margin perspective. It also gives the pricing power that Tesla has in the marketplace, especially in China with a lot of the competition coming on board there, and including here a little bit to a lesser degree here in the United States. As more competition comes in, can Tesla still squeeze out 20% margin, gross margin on their cars? And it appears for this quarter they have. Now, moving over to cash flows, this is important with Tesla to understand the cash flows of the company, that yes, they are pulling down a profit from a net income perspective. They've had very small amounts of net income over the last few quarters. We ended Q4 with $296 million worth of net income. Now, we want to take a look. Net cash provided by our operating activity. So this is cash brought in by selling these cars and the regulatory credits as well. And we see here $3 billion. So that's actually really strong considering we were at 2.4 in the previous quarter, and the previous year we were at a 1.4. So we basically doubled our cash flow. That's super, super strong. We see our cash flows from investing activities. This is like capital expenditures, things like that. It's stayed relatively steady at about 4 to 500 million, but they've really ramped up their investment with the factories and things like that. And this is good, in my opinion. They spent about $1 billion in last quarter, another $1 billion in this quarter as well. I have no problem with that. When you're generating $3 billion worth of cash from your operating, it's no problem to spend about a third of that in your investing in capital expenditures. Now, finally, you've got financing activities. And here's the big one that, most shareholders should pay attention to. So we've got proceeds from issuance of common stock. So we see here, these were these equity raises that Tesla did throughout the year. They did a $2.3 billion one in Q1. And then they had back-to-back $5 billion ones. This is obviously probably net of some fees that they have to pay the bankers and things like that. But they did back-to-back $5 billion equity offerings in Q3 and Q4. And so that helped bolster up the balance sheet. And when we take a look at that, here's our balance sheet with Tesla. So we've got current assets here. We've got cash and cash equivalents here. Notice we're sitting at $19 billion at the end of the year. This company is flush with cash. Take a look at a year ago. This company only had, I say only, but compared to 19, $6.2 billion of cash, not quite there. So they've really bolstered up this cash position. Again, not necessarily from operations, maybe a small amount, but the majority of this is by selling Tesla stock, not necessarily selling Tesla cars. We see quarter over quarter, it's even gone up a little bit by about that 5 billion mark, which they raised by issuing more shares. Now, what I want to show you here finally on this page, and then we'll get over to this stock chart, is the total liabilities. Total liabilities at Tesla is coming in at $28 billion. Okay, this includes total debt excluding vehicle and energy product financing at about $6.2 billion. So this company's actually done a nice job, in my opinion, of selling the stock rather than taking on like recourse debt or non-recourse debt or bank debt, so to speak. So they've taken on about 6.2 billion of that. That leaves their total liabilities here right in this 28 billion. Again, I just showed you this is a company with $19 billion just in straight cash, homie. And then when we talk about inventory and things like that, total current assets, these are assets that are relatively liquid, fairly liquid, at $26 billion. This is probably about as financially healthy as Tesla has ever been. That should catapult them even further into the new year and obviously give them a leg up on competition, which I think they already have. Now, let's come over to the stock chart. This is a stock we analyze all the time here on the channel, every Friday, in fact, on our Friday Fang Stock Recap show, where we throw in Microsoft and Tesla. I'll draw a line in here. This is about where Tesla is trading at now. I'm on a daily chart here. We could probably scooch this in a little bit so you guys get a little bit better view. But basically, we're now consolidating sideways. I showed that we had this compressed wedge going on. We broke out above it, and then now we it's kind of broken down. But now this is our new, I believe this is our new sideways consolidation area right here with Tesla. And honestly, it wouldn't be a bad thing if this stock consolidates sideways for a minute and then maybe ramps up to the upside, maybe with an Elon Musk tweet, or maybe with something out there with a new car or new partnership with maybe another car maker, or maybe they buy another car maker. There's a lot of things that Tesla can do that can shoot this stock back up above this range. Now, if we happen to consolidate here and this stock breaks down, you've got some obvious points down here. This 50-day moving average in green would be a nice spot. Anytime this stock has hugged this, it tends to shoot up. Any pullback into this box, which was our previous kind of, notice when this stock goes sideways, it wants to go one way or another. Typically over the last couple years, for a long time, the stock has just gone up. And so I would anticipate that to happen again. If it doesn't, the market breaks down, the market sells off. It should create buying opportunities at lower prices with Tesla. Considering how financially stable they appear to be, the fact that they've been able to raise a very large amount of money this year by issuing shares of Tesla stock, I think this company is well positioned to head into 2021 while competitors are still very far behind, at least here in the United States. China is a completely different story, but Tesla still has lots and lots of runway to go here in the United States. So hopefully you guys enjoyed this look at Tesla. We'll be back again with more videos very soon. Good luck with your investments.